Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to continue the theme which we started last week by having a look at the bigger overall picture over here and how that has now translated into the current Bitcoin price. I'll also have a look at the possibility of when to get into the Bitcoin swing trade, as there is a development going on currently with the end of the cycle nearing, which could trigger a swing trade. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, so before we begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions. So with that out of the way, we're basically looking at the overall bigger picture, which we did last week. And we were looking at really the peaks that before you get to these red lines, these vertical reference points for the halvings that we're going to get. So this was the first halving in 2012. The second halving was here in 2016. The last one was in May 2020. And the next one is going to be around April, May next year. So we know that from the previous halvings, we're going to be getting some sort of these types of peaks over here before you get to the halving. And secondly, in the second cycle, what we got was another, after the bear market, we got another couple of peaks there. And then the previous cycle in 2020, we got this bear market and then only one peak over here. And currently we can see quite clearly that we made a peak over here. It wasn't quite the blow off top, as somebody pointed out in one of the comments. So thank you for that. It wasn't a blow off top like we had over here and over here and over here, etc. But we had two peaks over here. And then since then, before the next halving, what we're doing is we're waiting for some sort of a peak, either one and possibly two, before the next halving. And those points would actually represent the points of reference where we could take some long-term positions off the table in order to accumulate after a correction at those points. So we'll have a look there. We should get at least one peak, if not two, and we'll need to know that nearer the time, but at least we've got one opportunity coming up in the next few months or so. And last week I pointed out the inverse larger head and shoulders here that we made, and the neckline was at 25,200. And since then, in this overall bigger inverse head and shoulders pattern, we were getting this head and shoulder pattern developing in this region over here. And since then, the neckline, as I said to you last week, was 26.8. And then what we got a breakdown. But as you can see quite clearly now, we've recovered that position. So that looks, with all degrees of probability, that that may well have been a fake out. But also this particular wick down here, as we'll see with the 60-day cycle, does give us a very good probability that we may well have got our 60-day cycle at this point here. And what I want to do today is to look at the 60-day cycle in relation to exactly what's been happening with these cycle bottoms that we got, which we made at this point and that point and that point. So you can see quite clearly we're making higher highs in these cycles over here, as well as the higher lows along the way. And that is giving us an overall upward trajectory that we've now bottomed out, and that the bear market is in, and that we're on a bull market. As emotionally intelligent people, we must always entertain the idea that we could be wrong. But my thesis, as I've been presenting over the last many months since December, is that the bottom is in over here, and that since then we've been making higher highs and higher lows, and with the help of the 60-day cycles, we seem to be going in one direction, and that's to the upside. Although we're having these pullbacks along the way, that's just healthy, creating a very good structure as part of the start of the new bull cycle for the next 3 years or so. So with that overall bigger picture in mind, how does that relate to the current 60-day cycle that we're in here? Obviously, we bottomed out here at the 15,400 level when we actually came down with the FTX scandal at this point in the cycle here. We bottomed out. This was our first sign that we've actually bottomed out, that we're into this new cycle over here, made a mid-cycle point there and made a right translated cycle over here before we came into the 70-day cycle low down here. And since the last cycle here, we've gone once again a right translated cycle, making a higher high from the previous high over here after the mid cycle point over here. And the confirmation for this high was when we took out, with these cycle lows here, we took out the mid-cycle point here. So the confirmation for the cycle top is when you take out the mid-cycle point. So this was a mid-cycle, we took out that low. Once we broke that down, that confirmed that the cycle top was in here. Similarly, we won't know that this is the 60-day cycle low over here at day 63 until we break these highs over here at $30,000. So that will be your actual ultimate confirmation that this is the 60-day cycle low on day 63 when we come and beat this price up here. And there's a lot of hurdles to get through, and I'm going to do that analysis now here for you. As you can see, we're in that window that I've been drawing for the last few weeks. Now once we get into this window, we should be looking out for a sign of a 60-day cycle low. And it looks quite rightly when I said here that day 45 seemed a bit too early. But we had to look at the possibility that it could be in. But once we took that out over here, that told us that this is now invalid, and we're going to make a new 60-day cycle low somewhere in this region within that box. So the multi-million-dollar question now is this candle here the cycle low? One thing you may have noticed is that when we got to the cycle low over here, have a look at the candle. You get a long wick at the bottom, which tells you there's a rejection of lower prices. So that's one very good tentative sign that we may have bottomed out. And if you look over here carefully, it's another similar sign where you get a long wick at the bottom to tell us that people are not prepared to sell any lower than this here. So you got one candle over here with a long wick at the bottom. The second cycle bottom here, again a long wick at the bottom. And currently we've got a similar sign over here as well. So that's a very good sign that we may well have bottomed out on day 63. The other sign of a cycle low is that when you look at this tentative sign of the cycle low, you look for a candle that closes above it. Like over here, this was the candle that broke above the high of the potential cycle low over here. So as soon as you get that, that's giving you another sign that we may well be on the upside. Over here, it was the next candle, the next daily candle, that closed above the potential cycle low over here. So similarly, at the moment, we've not got a candle that's closed above it yet. The current candle is obviously higher than the cycle low potential over here, but we haven't closed that yet. This is the current daily candle, so we've got to wait until 1 o'clock UK time before this closes. At the moment, it's giving very good tentative signs that we may well close above this, and the high we've got to close above is 27,100, which is the high of this potential candle here. And as I said, the nice thing is that every cycle low seems to have been a higher low from the previous time, and also creating higher highs along the way, which means that this bull market is all going up in the right direction. So there isn't any other narrative that tells us that this is not a bull market. So the real confirmation of the 63-day cycle low will be when we get above the $30,000 mark and take out these highs over here. And on the converse side, if we now break the low of this candle, that will mean that we have now got a failed cycle, whereby this then candle comes into play once more if we take this bottom out, simply because after this candle we made a 2-day cycle high over here, which means that we've now got a failed cycle once you break this candle, and from here you've got 60 days of a downturn. So this could be very ugly as well down here, so we must be aware of that. We do get failed cycles from time to time. They're rare in a bull market, but we have to be aware that they can possibly happen. I know people get very frustrated with these cycles, but the thing we've got to understand is that, yes, it would be very nice that if all these cycles would give us very clear signs of buy and sell signals, so we can actually buy over here, get in, and give us a sell signal over here so we can get out, and then another buy signal over here so we can get in, etc. But unfortunately, the world doesn't work like this. and certainly not money markets. And no market works like this, and we have to work through the emotional struggles of constructing what I call a narrative to give us an edge. And this is what these 60-day cycles do. They give us an edge, some sort of an understanding of the behavior of the Bitcoin price. So it's really a structural framework to get a glimpse into the mindset of Bitcoin and the direction it wants to take. And that's really what all these cycles are. They're a glimpse, an insight into how Bitcoin is wanting to go in terms of the direction of travel. And if we impose the 8 EMA on this price action now, you can see clearly that at the moment, this candle, although it's looking bullish in terms of its relation to the potential cycle low over here, we are struggling to get above the 8 EMA. So this would be another sign. If we can close the candle above it, then that would give us another further sign that we've now bottomed out on day 63 over here. But currently it's providing resistance around the 27,400 level. And on the weekly chart, once again, the 8 EMA is providing resistance over here. And if you look at where the cycles started and the bottom of the Bitcoin price came to at 15,400, once we managed to get above the 8 EMA, we have found very strong support all the way along. Even though we've dipped down there, we still came back on the weekly chart to come back above the 8 EMA. But last week was the first week that we actually closed below this 8 EMA. So that was quite bearish when we closed yesterday on this candle here, which was below the 8 EMA. So the question now is, are we coming back to retest the 8 EMA before being rejected here? And that's why we need further signs before we know that we've actually bottomed out on the 60-day cycle. While that's looking bearish, I just want to bring to your attention this pattern, which actually looks bullish as well. And that is that after, when we came down on this red Marubozu candle, we had 1, 2, 3, 4, 5, 6, 7, 8 candles over here before we had a big move to the upside. And when we moved to the upside here, we had 1, 2, 3, 4, 5, 6, 7, 8 candles one more time over here, which created the structure for this Marubozu candle to go to the upside. So this time frame of 8 weeks here, 8 weeks here, and guess what's happened over here now? So after this green Marubozu candle, we got 1, 2, 3, 4, 5, 6, 7, 8 candles here. And if this pattern is to be repeated, then this current candle on the weekly chart here should give us a big move to the upside. So we'll have a look, but it seems to be a little bit of a coincidence that on this candle, we're on the 60-day cycle potential low as well. So only time will tell, but something to be aware of. Another bullish development on the weekly chart is that the 200 simple moving average on the weekly chart, this is the most important moving average on the whole of the charts, on the whole of the Bitcoin price history that we've got for the last 11, 12, 13 years. Because we've often found support over here. This was the first cycle that we actually lost support over here and then used that as a bit of a resistance. But once we've now got above it, we're now coming back and finding support one more time. So this looks to be a very good sign that we've now bottomed out here, because we've come back and retested it before we go to the upside, hopefully. That's what we're expecting now. And it would make sense because it would come back to the neckline over here of the 25,200. While the price didn't come back to the 25,200, what we have done is bounced off the 200 simple moving average. And currently this weekly inside bar candle is giving good signs that the momentum to the downside has come to an end. And this could be the catalyst for the move to the upside one more time. So as you can see, there's quite a few bearish as well as quite a few bullish signs. We won't know until some of those confirmations, like I said. And if you're a swing trader with Bitcoin, there is actually a very good development currently with this current daily candle of a very good potential swing trade. That this candle, if it closes above the potential 60-day cycle low over here, if that closes, that's usually the catalyst for a move to the upside for a good swing trade. So like for instance here, once we closed above it, if you took that candle which closed above the 60-day cycle potential low here, that would give you that big move here. Similarly for this candle, and that would be applying the same principles to this candle over here as well. And the stop loss on this candle close above this potential 60-day cycle low would be at the bottom of this candle here at 25,800. That would invalidate this trade. But the potential to the upside is actually quite good, because if you look at the highs over here, if we continue to make the higher highs, then you would expect this to go to at least around about the $36,000 mark over here. So while the risk would be around about 5-6% to the downside, the potential to the upside would be around about 30% over here. So it's a very good risk-reward ratio for a swing trade with Bitcoin. This brings me nicely to the video I'm going to be doing on Wednesday for the Bitcoin Miners Club members, which is a private club. Now that we're getting tentative signs of a cycle bottom over here, we will be in a very good position in the next few days to be able to make some swing trades with the Bitcoin miners. And obviously they're a leverage play. So while Bitcoin may be going up by possibly 30% as the potential, the Bitcoin miners will be going up much more than that because of the leverage trade. So we're going to be having a look at that on Wednesday. And if you want to join us on Wednesday for that video, which will look at the potential over here, all you have to do is click the join button over here below any of my videos, and then you'll get this box where you can just click here to join. And what we're doing there is we do one video every Wednesday. So in a month you get 4 videos. So for the cost of a coffee you get 4 extra videos with a lot of insight into the Bitcoin miners, how they work, the technical analysis, and how the 60-day cycle actually relates to the Bitcoin miners, and also to look at the potential swing trades. And now we're getting to the point where hopefully we're bottoming out on the 60-day cycle with Bitcoin. And then we'll have a look at how that will relate to swing trades for the Bitcoin miners. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.